guys, it's Brenna, the CEO and founder of The Mortgage Shop. I wanted to come to you and explain the difference between a conventional investment loan and a DSCR loan. So both of these types of loans are meant for investment purposes only. Conventional investment loans, though, are known as full doc loans, which means they go off of your personal debt and personal income. They can use proposed rental income on the subject property, but it is heavily weighed on your monthly income and your monthly personal debt. Then the interest rate, kind of goes off your credit score with that too. You have to show as much assets for the down payment, closing costs, what have you. And then we run it through what's known as an automatic underwriting system with either Fannie Mae or Freddie Mac. And we will get, hopefully that approved eligible back and be able to pre-approve you for that. Then we send it through the normal loan process. It's like a normal loan. We get the appraisal. We're good. We close, With a DSCR loan, it is an investment only loan as well, but it is not a full doc loan. So it doesn't have to answer to those laws that are in place for full doc loans. It's more of a commercial business loan. So a DSCR loan, or what's known as debt service coverage ratio loan, does not go off of your personal debt or personal income. It goes off the property you are purchasing's proposed monthly rental income and the proposed monthly mortgage payment. So let's give an example. Let's say you purchase a property with DSCR. The property is at $3,000 a month. They usually want a 1-to-1 ratio. So your rental income has to come back proposed at $3,000 or higher for you to qualify for that loan. You do have to qualify with your credit score as well, like you would with a conventional investment loan, but they aren't looking at your debts. They are just looking at your credit history to make sure you pay things on time. They are also looking to make sure you do have enough for the down payment and closing costs and reserves, just like a conventional loan would as well. The cool thing about DSCR is you can close it in an LLC if you wanted to. So a lot of people may want to close in an LLC for anonymity or things of that nature. You can do that with a DSCR loan. Most of the time with conventional loans, you cannot. In my personal opinion, I see a lot of people saying they want a DSCR loan, and that could be the popular opinion right now, but let's look at that conventional loan first if you're not maxed out on your debt to income ratio, or if you don't have 10 max financed properties, because again, Fannie and Freddie allow you to have up to 10 max financed residential properties. So if you haven't met that requirement yet and you haven't hit your debt to income ratio threshold, then a conventional loan would be much better for you. It's easier and it has better terms. So when I say better terms, it's a 30-year amortized loan, and they do not have prepayment penalties. The interest rate will also be a little lower for conventional. DSCR, again, doesn't have to answer to those full doc regulations. So they do have a prepayment penalty sometimes. They can have a 3-year prepayment penalty. They can have a 5-year prepayment penalty. We do have a product that doesn't have a prepayment penalty, that is DSCR. They just have different requirements for each one. So keep that in mind. Interest rate for DSCR is going to be quite a bit higher than your conventional loan. And the reason being is because these investors or these lenders are basically qualifying you in hopes that you will manage that property you're investing in well. They are hoping you rent it out for a lot of money, So that's higher risk for them. So once it's higher risk for the lender, that means you're going to have a higher interest rate. So keep that in mind. You can get a 30-year amortized loan with a DSCR, but you can also do ARMs. It just depends on what is better suited for your needs. If you have any questions about these loans or want to see which one would best fit your needs for your long-term goals, please feel free to reach out to us. Click like and subscribe below, and I'll talk to you soon.